Director, Quantum Securities, joins us. Good morning, Sanjay. As always, good to have you with us.
Thank you, Lata.
Well, you were one of the persons who have been bullish on PSU banking stocks, and we have since seen some improvement, or at least some concrete steps taken by the government in terms of higher capex spending, planned spending. Will you pursue with your PSU bank bet? I'm asking you because today most of the private banks are in the red, and even some of the better off public sector banks like Bank of Baroda are seeing profit taking.
I have no doubt. In fact, I have complete conviction there on the PSU banking plays. And like I've always maintained, and my calls have mostly been a little longer duration calls. So I really don't worry about the random movements over 15 days or a month or maybe a day or two. I continue to maintain that over the next year or two, the financial services sector would give huge returns. There's a massive opportunity in there. And the fact that the RBI governor has now clearly signaled an accommodative stance with the rate cut, the PSU banks would be big beneficiaries of this. Plus all the steps that are being taken by the government to address whether it's the state electricity board issue dues, whether it's the banking sector NPAs to various commodity sector companies. All these are actually going to benefit the public sector banks much more than the private sector banks, and the valuations are not really reflecting that positive outcome in the next 6 to 12 months ahead.
Okay. Sanjay, hi, morning. But what about the upside for the market as a whole? Because, there seems to be no global positive news flow that can actually take the markets higher. In all likelihood, we could get a Fed rate hike either in December or in the early part of 2016, and then we'll start worrying about the impact on emerging markets again. So what do you think could be the upside for the markets from now, say, for the next 6 months?
See, if you look back and see over the last 2 days, we've gone up. In fact, yesterday we've gone up only because the entire emerging market basket, along with the currencies across the world, corrected and in fact bounced back from the aggressive selling they had seen. Markets like Russia, Indonesia, etc., were also up 3% and we were up 2%. Similarly, Singapore was up 2%. So I think we were up yesterday mainly because of the currency as well as the emerging market flows that we saw yesterday and the emerging market correction that we saw yesterday. So I think the Fed part of it has been discussed ad nauseum. In fact, so I don't literally I don't worry about that as much, whether we get that in December or we get that in January. It's more or less in the price. In fact, I'd be more than happy that the event gets done with. But I would start to now look at local events as far as India is concerned, mainly starting from what the Reserve Bank of India governor signaled, what the government is now aggressively getting into in terms of the reforms, in terms of some of the key stuff that have been pending for a while. Bihar elections will be out of the way now, more or less. So I'm going to look at the next 4 months leading up to the budget at a lot of policy action in India more than what's going to happen overseas. Unless, of course, emerging markets go into a tailspin again, we will not be able to stand out. But otherwise, the outlook for Indian markets look much better than any other market in the world.
Well, that point is taken. But, when you see an 8,200, 8,100 on the screen, is your instinct to buy or to sell? Because you clearly were saying that 7,900, 7,800 are support levels. We did see lower levels, but what is the call above 8,000? Would you want to buy now, or would you think that, no, I will get better levels?
No, I continue to maintain what I was to show last time. If I recollect, I think Andrew Holland was there. And, we both of us maintained a very optimistic target. In fact, he was talking about a 10,000 Nifty in this year. That's calendar year. And I continue to maintain that we will see new highs over the next 3 months in the Nifty. So therefore, which answers your question that at 8,100, am I a buyer or not? I am definitely a buyer. I would look to buy selectively, and I have no doubt about the fact that the combination of global factors along with aggressive reform process and government action would take us to new highs in the next 3 months.
Okay, fair enough. So since you will look to buy selectively, let me ask you about one pocket, which is a lot of the beaten down names, Sanjay. So whether it's, Tata Motors, Motherson Sumi, or even some of these metal names like Hindalco, Tata Steel, we notice some amount of buying action at lower levels. Between these two pockets, which ones have a higher risk reward now?
I think, we need to really get off, many stocks off our radar now, which tend to be over-owned, over-covered, and talk beyond the tension that is required. And one of them, in my opinion, is Motherson Sumi, There is a huge list of stocks to buy there. So, we don't need to really get into the stocks which are liquid, because otherwise investors totally, go in the wrong direction and they become traders more than investors. So, I can make a list of 50 stocks to look at other than Motherson Sumi. Of course, there is no judgment on Motherson Sumi is a good stock or a bad stock. But my view is that investors need to get a larger universe. There are a lot of opportunities across various sectors to look at now. We need to keep in mind that, irrespective of what the monsoon has been, the rural consumer is relatively okay, undamaged. In fact, the urban consumer is in a very good space right now. We've got the pay commission impact that's going to hit us in the next few months. We've got the festival season coming up. So, all these factors are going to play on many stocks other than the ones we just keep grabbing the headlines for whatever reasons. So we need to make our list across sectors and just buy and leave them for a year or two and don't look at them on a daily basis.
But like, for example, what? It's a theme which other people keep speaking to us about, the urban consumption theme, as well as the fact that it will get a leg up after the 7th Finance Commission monies are out there. What would you play? Would it be automobile stocks or would it be something else? Which would that be?
I would play automobile. I would play, infra plays, because, as soon as the banks' books get sorted out in terms of the NPA, etc., the electricity board dues get resolved, banks would have more leeway. The cleaning up with banks is already going on. I would pay consumer durables, which, companies which have survived this onslaught, which have less debt on them, selectively automobile, no doubt about it. So, there are a huge number of plays that one can look at. There are a lot of other consumer plays. There are a lot of other, mid-tier pharmaceutical plays which don't necessarily have to depend on the, news flow from US FDA, blah, blah, blah. So, I think there is a huge basket across sectors which will get impacted by the extra money that's going to come into the system in the hand of the consumer. And of course, there will be a lot of restructuring plays which one would be able to make money out of once, the balance sheet sorting out process gets away. Some steel companies may be in there. Tata Motors is another one which is sorting out things now. I think it's an unending list one can sit down. But the important issue is that an investor needs to do his homework and not actually spend time on television from 9 o'clock to 4 o'clock and worrying about what's up today, what's down today, whether it's Lata's talking about the PSU banks, or Lata's worried that there was a 50 basis point cut and the market hasn't gone up 100 points. I will leave that, Point is, build an investor portfolio and get on to it. If you're a trader, you can worry about all those things. But that's not where I'm coming from.
Well, if retail
doing
investors
wonders to our ego and our image, I must say, Sanjay.
No, but if retail traders and investors stop watching television, then you're taking our bread and butter away, So we hope otherwise. We hope they continue to watch.
No, that's not true. There are many wiser faces there. Lata, with no offense to you, like Anuj, Varinder, Shireen, Menaka, who do a phenomenal amount of work and come up with real themes, which will actually evolve and become those 5x and 10x because they're able to gauge them. Of course, no one can replace Lata when it comes to, the banking sector and the RBI watch. So, I think you're the best in the country, or maybe probably one of the best in Asia. But what I'm trying to just get at is that, investors need to really understand that they need to be investors and not be traders and not worry about, okay, aaj Nifty 100 point gir gaya, kal 50 gir gaya,
that point,
aaj wo Fed badhayega, ghirayega, aaj raat ko Fed ka rate dikhta hai, kal wo Merkel kya bolegi, so it looks like we all get into this whole, morning evening process, and we lose opportunities in this whole deal.
Okay, so let's talk about one opportunity then. You know, what the government is really doing well is this whole proposal to recast the loans of the 9 discoms. How would you play that theme, Sanjay? What are the utilities you would look at, the banks that have exposure to discoms in the power space?
I think if something that I really want to buy and just forget about and probably go for a holiday for 2 years would be a State Bank of India at the current levels. You know, the sheer mammoth and the, you know, size that bank is, and the fact that what RBI has come out with, that, you know, these 2 key strategic banks in India, and the fact that, you know, the joint lender forum process. I'm not saying it's a perfect solution, but the fact is that it gives a substantial edge to these 2 banks in this whole process. It may not be the ideal solution as to what I would want or what, you know, people would want, but given that what is there, I think something like that looks very good, because these kind of banks have substantial exposure to, you know, all the government accounts, state electricity boards, etc., and similarly other banks. So I think once the whole cycle begins, there will be innumerable number of companies and opportunities that will, you know, come in and give you, because you know, the money is stuck with these state electricity boards. They're not able to buy, so therefore the ancillary industries who supply equipment to them, who deal with them, contractors, they are stuck, which are a large number of listed companies. The whole cycle starts moving, and that's where we need to keep a watch on as to who will benefit from this. And those are the ones which will give us those 2x and 5x returns.
In terms of valuation, which of the capital goods companies do you like? I'm saying valuation because L&T is, you know, a stock on everyone's radar and therefore well priced. Would you look at other capital goods and, for that matter, even the construction companies? You spoke about infra in particular.
Oh yes, I think second-tier good quality construction companies, second-tier good quality infra execution companies are the ones who will gain the maximum. You know, there are a large number of them which one needs to look at, in which really in the last 3 years have been beaten down to, you know, nothing, as if they don't exist. So, but investors need to remember that you need to do a lot of homework there. You need to watch them, and it's only then you're able to beat the returns that you get from the L&Ts and all. You know, you just can't be complacent about them. So, given my kind of investor profile, that's where I would want to be. But if someone who really doesn't want to get into that, then of course the BHELs and the L&Ts would give you those 10-20% return on annum in your portfolio. Sit on them for 5 years, you know, forget about it. But if you really want to make that extra 30-40% CAGR over 5, 8, 10 years, then you need to go down and do work on these second-tier companies which would become big, because after all, you know, if you look back 5, 8 years, 10 years back, what HDFC Bank was and what HDFC Bank is today. So if someone did his homework then, you know, he wouldn't be laughing his way to the bank. He probably would be owning half of his own bank, you know, if he sat in there. So this is the key issue for an investor, and not to, you know, worry about what's happening on a daily basis.
Okay,
you know, get the theme right. Sit on it, yeah.
Just one final sector question to you, telecom. Now they've also got payment bank licenses, with or without it. Is that a space that you like?
I like that space, but again, it's not going to give quick returns. You know, the froth needs to go out of there, but I think, you know, companies like Idea, companies like Arcom look very exciting. If what one hears right now, what Mr. Bani announced in terms of being able to align with, you know, the Geo launch and the Geo integration over the years ahead, I think something like that can be can give phenomenal returns. Bharti is a stable space to be in, both in terms of the payment license play as well as the, you know, telecom play, etc. So, but if I really want to play some high risk and high beta plays and get more money, I would bet on probably an Idea and a Arcom at this point of time, because the telecom sector woes are more or less out of the way. Government is in a real aggressive sorting out mode. I really like the decisions they've taken on the spectrum sharing and all those things.
Yeah.
What I like about the government is it's slow, but it's solving problems. It addresses problems. It bounces it off the industry, bounces it off all the consumers. It has made mistakes, it retracts, it corrects, but it's solving problems. That's, I think, what I'm really impressed about this. It's addressing the issues at hand.
Oh yes,
no
it
two ways about
definitely is.
that, yes.
Sanjay, we'll have to leave it at that. Thanks so much for joining us and giving us your views. That's the word coming in on the markets. But let's focus on one story.